Hey guys, welcome to my channel. This channel is going to focus on cryptocurrency, but we're going to go over some fundamentals and technicals. We'll go a little bit deeper, show you some things you're not going to hear anywhere else in the news. Because you know why it's important to go over these fundamentals and technicals is because usually the markets are about 4, 5, 6 months ahead of everything else that you're hearing about in the mainstream media. You're not going to find this here. Jim Cramer is not going to let you know about this because he's not going to have any viewers. He'd be like me with minimal amount of viewers. So let's check it out. If you just landed here, do me a favor, smash that like button, be greatly appreciated. So I'm going to go over some stuff and some very, very, very boring charts with you guys. Okay, try to put things in perspective. Now let's take a look at some things of what I think is going on. So I get this chart here. It's called the federal funds rate, the interest rate. You can see here that, it was really, really low. I got a trend here too. The trend that the federal funds rate is on. And you can see it's starting to make kind of a trend, go down, back up, down, back up, down, back up. Now, a couple things that I want to show you about this. In my opinion, this is my opinion based off this chart data. I'm not going to try to say that I'm Nostradamus or anything like that, or you're going to call this sorcery or magic or whatever you want to call that. I'm just going to give you my opinion, what I think could be going on based off trend data and past data, what they've done based off this information from the charts. So if you take a look at this raises rates up quite a bit, but also you get handy little RSI data with these charts too, which is very helpful. That's the momentum. For those who don't know, this is a momentum indicator. So the momentum blasted back up because they raised the rates. And here's the trend. So they're right there. More than likely, they're going to come up and touch that trend or in that area. So we can suspect that we're probably going to be looking at maybe another 75% rate hike up to 1.5 maybe, and then maybe a little bit more up to 2%. So I'm going to make a guess. This is just my guess, guys, right here. Fed rate going to go up, say 2%, 2 more rate hikes. Because they can't go any higher, really, guys. They can't raise interest rates that up. If you realize that if they raise interest rates, they start destroying their own system. And then you know what it's going to do? It's going to go back down like this. Boom, 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 boom. And it's going to go back up like this until it breaks this trend, guys, just like this. Until it breaks that trend, until something happens to break this trend and it gets over here, they got to raise them up again. Okay? And you'll see it in the RSI. So once they raise this up to this area, say 1.75 or even up to 2.0, this RSI will go way up here again, telling you it's going to go back down. I'm telling you that's what's going to happen. More than likely, that's what's going to happen. Okay, so now let's check some other things out. People talking about interest rates. They're panicked. There's panic in the street about these interest rates. Guess what, guys? Interest rates are low, 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 low. And just because the Fed raises interest rates does not mean assets can't go up. I'm going to show you an example with the Dow Jones Industrials back in the 70s. Check this out. If you see right here, you see this is February 1972. Interest rates were 3.25%. Federal funds rate, I should say. Federal funds rate was 3.25%. Let's go to Dow Jones Industrial. That's what is that? December 71, March 72. Check this out. That's right here, right in this area. Okay. You see that? They raised interest rates and then it went up. It went up, guys. It actually went up 37%. And it didn't take effect. It took it from December 71 to February 73. It took it a year and a half before it did the dump. But what's the difference between now and back then? Check this out. You see, it was 3%. You know what they raised interest rates to? Look at that. They raised them all the way up to 12%. 12%. So if we go here, that's July 74. Put that over here, July 74. So they started raising interest rates, 3%, jacked them all the way up to 12%. You know what that would do right now? I mean, that would take care of inflation for sure. That would just destroy everything. But it still went up significantly, 37, 40%. And then They jacked them up so high that it finally dumped like that. There you go. That's what everybody think is going to happen with everything's going on. They're acting like the Fed. This is the narrative in the mainstream media with all the panic that's out there in the street. They're acting like the Fed is going to go from 0.75 federal funds rate to 15%. 15%. They're not going to do it because they can't. They can't do it, guys. So for Dow Jones to cause the dump, it took it a year and a half until it finally, boom, they had to keep jacking them. Okay. Now I have another chart. You take a look at this federal funds rate. Oh, this is the Dow Jones. Take a look at the federal funds rate over here. You can see this. I'm going to show you something. You see right here, it was down there where it was before, basically at zero. Okay. And then they raised them up all the way over here, 2.5% basically, right? And jacked it up on the RSI. Let's take a look at Bitcoin. I got that marked out. That's where they started over here. If you want to go off that chart data and look what Bitcoin did, boom, and went down. Okay. And then all the times it went down, oh, blame it on interest rates. But then Bitcoin went up. Never heard anything about interest rates. And Bitcoin goes down. Oh, that's interest rates. Bitcoin goes up. And now it does a correction. Oh, that's interest rates. You guys see the things going on here? I mean, like, people are like panicking in the streets here, man. It's like, I'm like trying to show you, get you this little basic common sense in here. So, all right, now a couple more questions. I'm gonna go over another boring chart. Is oil chart. Oil chart. Okay, this is possibly, you can see it's dumping down 101. Who knows what's going on? But this is good news for the market. We want this to happen. You want oil to come down, and it looks like it's come down. So, hey, I got to give credit where credit's due. Jim, that follows this channel, said he thinks it's a truncated fifth wave failure. He might be right because oil is dumping, and hopefully it continues on that trend. If that fifth wave is over right there, if it's over right there, more than likely oil's got to correct this whole cycle. So you come over here, you see this on the RSI, way over here. It's going to correct that whole cycle. So it's going to come down there in the RSI. Who knows where it'll be in the price? You know, the lower the better for inflation. And you know what that means? This goes down, markets up, Bitcoin up. Watch. All right. So I want to go over the natural gas chart too, because people had some questions about that. Said, Greg, it's doing a 1-2, 1-2, 1-2. It's going to moonshot. Well, let's take a look at that data. If you take a look at the weekly, there's some questions on it. If you take a look at the weekly, it's got a third wave peak. So this to me is like a 1, 2, 3, 4, and then it went up for a 5. Okay, and like a diagonal type move, more than likely. Now there's some questions about that. I'm not so sure about this natural gas. Maybe it has something to do with Europe, and I think maybe was the Russians deliver the natural gas to Europe, and they're cutting it off. So maybe it is a 1-2, 1-2. Maybe that's the reason. But if you take a look at the 2-week chart, it does paint a different picture. So I would say that it's questionable going out to these farther data charts and looking at it on the monthly. It could be 1-2, 1-2. So we're just not going to know yet. And I'm thinking like a 4-day chart. It's got the peak there. So more than likely, it's going to correct the cycle. I'm going to go to the 3-day chart. You see, it still has that third wave peak right there, guys. So it's going to depend on how this susses itself out. But looking at the weekly, it's looking like it's in a topping pattern too, guys. So that one would be open for debate. I know a lot of people are buying the dip on natural gas and they think it's going to do a moonshot. I don't know if I would do that. I don't know. I would wait on that. That's just my take on it, especially with oil going down. I don't know. Maybe they're betting on the whole Russian thing or something like that, and that is a possibility. So we just don't know. I would let it suss itself out. Now the other thing is too, I'm going to go over the USDC dominance chart. Another boring chart nobody likes to pay attention to, but I think it's important. Here's the reason why. If you take a look at this, it's doing a third wave peak, and I think it's going to come down, and there's going to be another shot up on a smaller fifth wave. And why is that important? Well, what does that tell me? Right now, it's going to correct. So people are going to exit USDC. They're going to take USDC and they're going to go back into Bitcoin. And then Bitcoin is probably going to go up a little bit more and do another correction. And everybody's going to jump back into USDC to do this fifth wave right there. That's what I think. That could happen, guys. It looks like it wants to do it, according to the charts. So Bitcoin probably does have one more correction down. There's a possibility. I'm not saying for sure, but that's something that could be a possibility. One more correction down, and then maybe it's done. And the reason why I'm going to say there's a possibility of it being done, we're going to go over another asset. Binance. Nobody likes Binance. Nobody likes this coin. But here are the facts. Binance is a company. If you look at it from a fundamental point of view as a company, they didn't get Super Bowl ads. They didn't do anything like that. They decided to not do this excessive spending during the bull market, the bull cycle. And he wanted, the CC guy running the company, he wanted to make sure his company was strong, getting ready for a bear cycle. From a fundamental point of view, this company, if you're in the crypto market, this is probably going to be the Google. Like when people back in the .com era, they were looking for like a Google. They were like, a Google, say, so like there's Yahoo and there's all these other companies, but Google was just starting and people were looking for that Google and they all thought it was the Yahoo or this other company like that. I can't remember the other names. I just remember Yahoo was big back then. And they were looking for that one. Well, surprisingly, the one that popped out and became the monster was the Google. Google did. And there's a possibility in the crypto market, this is going to be the Google. Kind of like Bitcoin. Bitcoin will be always the daddy of them all, the father of the crypto. But it seems like to me that this is going to be it. And the reason I say that is not only did he didn't spend and waste his money on ads and Super Bowl ads and do things like that, he was focusing on the fundamentals and keeping his business strong, getting ready for markets like this, bear cycles. And he's hiring more. He has, sounds like excessive cash in the business or enough cash to be able to do that. So he's still growing. Well, price goes down. I think that's a good sign, guys. So, but also from a technical point of view, I'm looking at it from a technical, and I went through these waves. And to me, it seems like Binance correction is done. Like it's done. It's hit my box. It's everything. I looked at it, and you know, the only other option is that we are going into some sort of severe crypto winter, and Binance is boom, because once if it's not done here and it's just going to bounce and it's coming down, it's coming way down. So you either think that this is going to get a bounce, destroyed, or it's done. It's pretty much done. There might be one more down, but and then if you take a look at it too, it's going to do this run, and it's going up to at least $1,000, guys. This coin, Binance coin, is going up to at least $1,000. All right, that's the end of my video. It's a little bit long. I don't want to make it too long-winded. I know most of you like the 5-minute videos and less and things like that. That's fine. That's just my little bit of thoughts and everything that's going on into the market. Lots of panic, fear, and I'm just trying to put a perspective out there of what markets actually can do. And what you have to realize is the markets, what we're looking at with this data that I'm presenting to you, is ahead of what's going on out there, and you're listening to the mainstream. Make sure you don't fall for the FUD and keep your focus on the technicals and what makes sense. Unbiased, don't have a bias towards one. People get wrapped up. What happens is that they plant things in your ear and they think, oh, it's done, it's doom and gloom and everything like that. And you don't want that to happen to you. If you keep your focus on the technicals, then you can make much better decisions. If you made it all the way to the end, smash the like, smash the subscribe. Peace.